Now, around 130 countries have agreed to sign the Paris Climate Agreement, countries including India, the United States, and China. Now, China is interesting because it is the world's largest energy consumer. The country is also the biggest investor in renewables, but it's also one of the world's worst polluters. So will China, with all its dichotomies, be able to curb emissions? That's the question I asked World Bank Director of Climate Change, John Roome.
China came up with an NDC, a nationally determined contribution, that was very ambitious, both in terms of reducing the energy intensity of the economy and reducing absolute emissions, flattening out their absolute emissions. This is very important going forward. They also have a track record of being able to innovate on the energy front. If you look at the growth that they were able to stimulate on renewable energy, both solar and wind, and the way in which they are now moving, for example, on implementing their carbon market, going from pilots in small areas to make it a national carbon market, all of these are moving in exactly the right direction. So obviously, as for any economy, it's tricky to make this kind of a transition, but our sense is that there is a strong ambition on the Chinese side, strong alignment of incentives, and a strong track record of having done this in the past.
Next week at the United Nations event, over 100 countries have declared their intention to sign, including the US and China. Now, if enough countries do come on board and sign and ratify, then we see this going into effect in 2020. What happens if enough countries don't sign? What happens then?
Well, we're actually very optimistic that countries are going to sign, given the background that we had for it. But I also think what's important is that coming out of Paris, there is already enough momentum for action to be taken by private companies, by governments, and by local governments to actually move forward on this agenda. I think the fact that you had this agreement in Paris was symptomatic of a willingness of people to move forward with implementation, and we think that that's what's going to be most important.
I think it's fair to say that there's a lot of excitement and optimism that surrounds the Paris Climate Accord. But if we look back to '97, the Kyoto Protocol was not successful. Then we look back again to 2009, and the Copenhagen Accord was called a spectacular failure. So I think it's also fair to say that people are treading with cautious optimism this time around. I guess if you had to gauge your level of optimism that this time around we will not fail, that it will work, how do you think you feel about that?
We're pretty optimistic. I think that there's a couple of reasons. First of all, this Paris Agreement is fundamentally different from the other ones in the sense that it was built bottom up. And so it was not a dictation of standards being put on people, but it was countries coming up with their own proposals, their own nationally determined contributions. And I think that dramatically changes the dynamic because you've built that bottom up. I think that's one thing. Second thing is, from the private sector perspective, there's a lot more energy going into this, a lot more interest, a lot more dynamism going forward. Third, I think over the last period of time, we've seen a number of technology advances, particularly in renewable energy, which makes it a lot easier to move forward with the implementation of these kinds of things coming out of Paris. So we're actually very optimistic.
Making the shift to clean energy is going to be a very costly affair. We saw recently that global growth around the world, that forecast has been downgraded. Emerging economies are not growing as rapidly as they should. In fact, a lot of countries are suffering at the moment because of the lower oil prices, volatility in commodity markets. Where is the money going to come from? And do you think that lending from the World Bank is going to increase because countries will need World Bank money in order to make that transition?
I think the first point to note, I think, is that if you talk about the energy transition, yes, it's going to take a lot of money, but what we have is technology and institutional developments on our side, in the sense that what you're seeing is falling prices for renewables, which makes it much more competitive and much more easy to implement. And you're seeing investments in renewable for the first time outstripping investments in fossil fuels. And we're seeing that this is taking place and moving forward independently of what's happening on oil prices. So I think that that's creating an opportunity that certainly didn't exist before. On the World Bank side, we have already committed to increase the share of our lending volume that goes to climate-related benefits, to climate-related activities, from 21% to 28%. And we're going to increase our mobilization of private sector financing to bring the total by 2020 to about $29 billion a year. That's a significant increase on our part. But more importantly, we're focusing very much on mobilizing private sector financing to make sure that the amount of money that we put into particular deals, into particular countries, is focused on leveraging private sector financing.